The first thing I do every morning anymore is touch my phone and go to my Moo app and look at my watch list, and I see that Apple was down about 3% yesterday, Amazon down about 5, Microsoft down 3, Nvidia down 5, and most of them are in pre-market, it's showing me, just not up less than 1%. In fact, Nvidia's down. So I look at that and I say, what are we doing in the stock market if we aren't buying right now? And then for deeper information, I touch the Nvidia and I see that it tells me that on November the 22nd of last year, it was at $346 a share. And today it's down to $159. I think it's fair to say it's on sale. Look a little further. Let's look at Amazon. Amazon tells me back a year ago it was at 188, and today it's at 107. If we're not buying at these prices, what are we doing in the stock market? Moo gives me all of this in my hand. Don't need to open up my computer. It's a tool that I've come up with that I'm really happy with, and they've given me 10 free stocks. So Moo gives me all this information. The question is, what am I going to do with it? It's a tool. How do I use it? How do I take this tool and turn it into something that works for me? Well, what I think I need to do next is go to my other tool, and that's TradingView, and figure out where I think the potential bottom is on these stocks and how I want to go in and basically control my risk. I don't want to try to catch a falling knife. I don't want to say, well, I'm going to wait until Amazon gets down to $90 a share. It may never get there. But if I buy it at 101 and it goes down to 90, yeah, I could have made another $9 a share. But if it never gets there and I never buy in, I'm the loser. So what I want to do now is go to my computer and do some analysis using some of the tools that the TradingView makes available to me to help me make a good investment decision.
Best of Us Investors presents Carrie Griegmeyer.
Okay, this is my TradingView Amazon. As you can see, I have it on a daily chart, and I have several things going on here. This is a ability for me to track from its high, this blue box here, to actually where it's at now. Its high was somewhere around July of 21, and now today it's down 43.13% from that. The other thing I got going on is this blue box over here, and that's a Fibonacci retracement. And what I have done, in order to do that, I come to this box over here, and I click, and you see it says fib retracement. And so I put a dot on the low point I want to track from, and I have chosen the low of the coronavirus. So then I take and extend that dot to its high, as I said, of July of 2021. And then the theory is, through Fibonacci, that it will come down at some level. I'm choosing a 50% level and a 78. What I've got here then is it's saying that if Amazon's going to retrace this surge in price, at 50%, it will come down to 133 or 135. At 78%, it'll come down to 104, and we know it has surpassed that. We can see here it actually came down to somewhere in 100, and it's currently trading at 110. And we can see here that it has been as low as 106.99 today, and it's near its high for the day, 110.99. So that gives me the range as to where I want to buy into it. I look then at this even closer and say, okay, it appears to me there are some support levels here at about 106, 107. So that would be my place that I would say that's where I want to buy. It has been down, as I said, to 101 or less. I believe if I should have bought down then. I don't see, if I go over here and look at support levels, I see a support level at about 97. I would guess that's as good as it's going to get. And I would also put a time frame on it that if that's going to happen, it's probably going to happen at the end of July when their earnings statements comes in. So with that said, I want to buy dollar cost average into Amazon, and I probably want to buy it at something in the neighborhood. Today it's up 2-3%. I would probably like to buy it somewhere around 105. Okay, so that's that stock. Then I want to go to the one that I'm really interested in today, and that is Nvidia. I want more Nvidia. I want to buy Nvidia and dollar cost average into it because I think this is the strongest chip company. I believe the world's going to be driven by artificial intelligence, and I believe that Nvidia is going to be very strong in that. Again, this blue chart traces its high to low currently, and it's showing it down 56% from its high in November of 2021, and it's at that level now. I then put my Fibonacci, and here again I'm starting at the low of the subprime or the coronavirus and the high of November the 24th, and my Fibonacci at 50% says that it would come down to 196. It has passed that. My 78 says it will come down to 111. I don't know if it'll get there, but I like it at this price. I, in fact, have an order in right now at 152.50. And my strategy is it could get down to 111, but I want more of it at this price. I want to bring my cost basis down, so I will follow this very astutely, and as it goes down and it offers me, and that's really the way I'm going to look at it, as it offers me buying opportunities, I'm going to buy in. Google is another stock I want to add to my position at these lower prices. And again, I look at my TradingView chart and I see to set up a Fibonacci, and I start in March of 20 and put my dot down here as my starting point and go up to it looks like November of 21, and that gives me my surge. And then I enter my Fibonacci, and you see I have a 50% Fibonacci retracement, and you can see that Google came back and exactly touched it there. So let me add the 75%. What I do to do that is I merely open it up. I go to the gear, and the gear gives me the various levels that I want to show my retracement, and I put it at 78, and presto, there it is. So it's telling me under my criteria that we could come as low as 1494. I don't know that it'll come that low. Actually, they're showing 1501. I look at it and say, well, there's other support levels. Certainly there is one here where it came down to its 50% retracement. And then there is another one here at 1829, 1830. So this is the range that I would say if Google has a bad earnings report, and if the war gets more even violent, and China does some crazy things, that we could see Google come down to, say, 1722, 1750, something in that area. So that's what I'm going to watch at. My emphasis, though, is I want to be dollar cost averaging into these stocks as they go through what I think is going to be some tough times, the recession of 2022. But I look at them and say, these are also the stocks that are going to be the big leaders as we move out of this downturn in the market, this reset of the market, and the improvements in technology, particularly that of artificial intelligence and machine learning. They are going to have a big impact on companies like Google, so I want to be dollar cost averaging into them. But that's how I look at these stocks. And again, I want to emphasize they're on sale. And if you'd like to talk more about this, come to our Friday meeting that we have on our Discord. And this will be a subject that we'll talk about. Where do we buy in to these stocks at the low sale prices they're at? Because if you look in the future and say, what is going to drive the future? It's artificial intelligence, it's big tech, it's the healthcare fields. I think you're going to see some of these people buying up some of the healthcare stocks. Amazon, Google, Apple, they all want in that market. So that's what I'm doing. Use these tools, to help you make better investment decisions.